Muslims in general cannot borrow money at interest. So it's prohibited to borrow money at interest because the act of borrowing and lending in Islam is a charitable act. We end up hiring 18 different law firms in the US housing industry to work with these scholars to create what has become the most innovative mortgage structure that the US has ever seen in the last 30, 40 years.
What's going on, world? And guess what? I believe that there is riches and niches. And one of the great joys of traveling across the country is that you get to meet a lot of people doing a lot of different things, especially when it comes to having niches to serve everyone, regardless of race, regardless of ethnic group, basically bringing the world here to the United States. So at the Realtor legislative meetings, I had the opportunity, and I have checked myself on pronouncing his name correctly, but we have Usam Quoto. Say it for me. Say it for me. Say it for me. The world will know. And you know what was very interesting? So I'm here in the city of Chicago. I know a lot of people from the Islamic community have gone to the mosque on numerous occasions. And as soon as you start talking about Guidance Residential, LLC, I understood how it could help me serve people in the Islamic community because there are different traditions. So if you can't tell the world about Guidance Residential and what it is that you do that other lenders, or not lenders, but the ability to be able to close on traditional real estate, what it is that you do.
Well, thank you for the opportunity, Marky. It's great to be here. So Guidance Residential has been in business now in the United States for about 22 years. Yes, quite a long time. We didn't start off in all the states that we're in today. We started off licensed to do business in 3 states. Today, we're in 34 states. And we provide Islamic home financing to anyone who wants it. But the target niche is the American Muslim community of home buyers, homeowners who want to refinance, for example, as well. And so why do we exist? Well, 22 years ago, when we just wrapped up our 3-year research and development project to understand this market really well and how we would be able to provide this solution to American Muslims to finance homes in accordance with their faith, we recognize that there is a pent-up demand. Muslims in general cannot borrow money at interest. So it's prohibited to borrow money at interest because the act of borrowing and lending in Islam is a charitable act, meaning that contract is a charitable act. There are specific types of contracts that are permissible for American Muslims to be able to engage in for things like investment, buying a home is an investment. So for investment purposes and such. So we spent 3 years, millions of dollars, a lot of R&D work involving 7 of the world's leading scholars in this space, working closely with our business minds. And believe it or not, we ended up hiring 18 different law firms in the US housing industry to work with these scholars to create what has become the most innovative mortgage structure that the US has ever seen in the last 30, 40 years. So that's what we do.
And so I found that interesting because I have friends who, one, have been seeking what it is that you provide for years based on their Muslim faith. Okay. And then, of course, you know that Farrakhan is here. So different Muslims, right? Not all, would I say, would it be the same sector? You're going to have to get me straight here. Like I'm, Church of God in Christ, right? But they're different sectors, right? And so regardless, right, just if you are an American Muslim, that they weren't able to buy. So I've known people who we could not put in real estate based on their Muslim faith. You stated an innovative product. What makes it innovative? Like you took these scholars, You've brought these attorneys. What makes this such a unique product?
Well, we changed the relationship altogether between the financier and the homebuyer. In this case, there's no borrowing and lending of money. So we introduced a contract called, in the traditional sense, called the musharaka agreement, which in English means partnership. So it's a partnership for the co-ownership of a home and then the ultimate transfer of ownership from one party to the next. So in our case, when a customer sits at the closing table and signs all that, that big stack of documents, the one contract that matters the most in that entire sort of sitting, in traditional mortgage lingo, it's the lender agreement, right? So they sign the lender agreement that characterizes the relationship between a borrower, and it's, you're called a borrower at that point. You're identified as a borrower of money, and the lender. That does not exist in our contract. We have a completely different contract called the co-ownership commitment agreement. That's what's signed. And it characterizes us as co-owners with the home buyer, where we establish an LLC. And that LLC represents the percentage of ownership that we take on in the home with the home buyer. So if they're bringing, let's say, 10% down, and we can do as low as 3% down. So if, let's say, we're bringing 97% down, we establish our ownership in the home as 97% owners of the home with you. And the agreement stipulates that, it fits really well with the conventional mortgage structure. So the agreement stipulates a term, 30 years, 20 years, 15, whatever the consumer chooses. But in that term, they agree to buy our shares in the home out, while paying us a usage fee to utilize our portion of the property. And you can imagine each month as they're buying us out, our portion decreases, our ownership decreases. And so the usage fee actually decreases each and every month, while the acquisition portion of the monthly payment increases each and every month. That is permissible Islamically, because to pay for using something equivalent to, let's say, rent, that's halal, that's permissible. But to pay back a loan at interest is prohibited. And this prohibition goes way back. It's before Islam. In the Abrahamic faiths, borrowing and lending money at interest is strictly prohibited. And it says so, for example, in Exodus, do not lend money to my people at interest. And so this is something that's been around for some time. There's a corrosive nature in establishing a monetary system around lending and borrowing. And so not having an actual ownership, not engaging, not being part of the asset, whatever that may be, the transaction, leaves financiers in a way that they're kind of, away from the transaction, and puts all the risk on the individual taking the money. And so from our vantage point, we're the only mortgage company in the United States that actually have risk sharing. And I can go into a little bit more of that if you'd like.
Oh yes, I want to understand the risk sharing, because this is something that we didn't discuss previously. So when we think about risk sharing, how are they sharing in the risk, and is it also a percentage share in the risk based on the ownership percentage at the time of the risk?
Yeah, great question. Great question. So we are in the business of facilitating homeownership, right? So we're bringing our cash to the table and taking an ownership stake in the house. The money that we're going to make, our profits, we're a pretty transparent organization. Our profit is solely from the usage fees that we charge on the property. And we're pretty competitive. We benchmark our usage fees against what's the prevailing rates out there in the industry. So we're not trying to be the cheapest or the most expensive. We're trying to be comparable. And then from there, the obligation on the customer is to buy us out over time. So now, if let's say there's There's two types of risk sharing. There's one associated with a trigger event like a natural disaster or eminent domain. Those are trigger events that have not been brought on by any one of the partners, meaning it came from an act of God or an act of the county, or right. So in those cases where the property that binds us together, is dissolved. So in this case, you have proceeds that come from that result of the trigger event. The proceed may come from the insurance company in the natural disaster. In the case of eminent domain, it would come from the county or the state or the city. Well, what happens if the proceeds are less than the value of the home when we bought it? Those trigger events, because they're not caused by either one of us, we will share in the loss, should there be one, pro rata, according to our percentage, that, like you mentioned. And this happened. We just had a hurricane event, for example, in the United States. And these hurricanes are getting more and more severe. We had one a few years back that hit Houston and caused flood damage in non-flood zones. And so these homeowners did not take out flood insurance because they were not in flood zones, but the homes were destroyed because of floods, and the insurance companies did not pay up. We took the loss with them. We took the loss equivalent to our percentage of ownership in that home. So in a simple example, if it's a $100,000 home and we were 90% owners and the customer was 10% owners, let's say 90, 10, 90,000, 10,000, and the insurance check came in, it's for $80,000, we would take 90% of that 80 and the customer would get $8,000, 10% of that 80. This is in total loss and things of that nature, right? So that's the nature that I'm talking about in terms of risk sharing. Now, there's another type of trigger event. It's default. If somebody loses their job and can't make their payments for whatever reason, right? We have a non-recourse clause in our contract in every single state that we operate in. Doesn't matter if the state prohibits it or not. Our contract prohibits it because our contract says that we took an ownership stake in the property. We didn't loan you money. If we'd loaned you money, doesn't matter what the house sells for at foreclosure. If there's a loss on our books, we're coming after you to recoup your debt, to recoup our funds. We never loaned you the money, so the money is in the asset. And so if the asset depreciated and we ended up selling it for a loss, that's God forbid, during default, foreclosure, whatever, we take that loss.
Wow. Now, I used to be the queen of foreclosures. And so I'm thinking, I'm just going to say, wow, okay? Because here in the state of Illinois, they were all potential recourse. And then even when we started doing short sales versus allowing the property to become an REO property, then the home affordable foreclosure alternative allowed those homeowners to not have to pay taxes on the unearned income. So I mean, like, it's recourses at, of course, multiple layers here. So I do have a question. When it comes to the insurance, who's responsible for insuring said property? And is there any special additional insurance that you have in place to offset some of these costs that might occur?
There's nothing additional. So we follow our investors who have been gracious to kind of embark on this unique journey with us since 2002, and that's Freddie Mac and Fannie Mae. They agreed that our contracts produce revenue and should be securitized. So as long as we were meeting their guidelines, they were going to participate in this unique natured contract with high risk, by the way. So our contracts do come with a higher risk, but we shoulder that risk. It's on us. So in the case of insurance, we don't mandate more insurance than what the GSEs have required. And so now, how is insurance paid for, as you asked? So typically, when you look at a homeowner's policy, it's three things that are in there, right? It's and the insurance companies bundle it together. There's personal possessions, which is the occupant's personal property. It's theirs. There's hazard insurance that's in there. And then there's also the insurance that handles, for example, the brick and mortar, the actual asset. We have essentially two programs to ensure that we're being fair. So the personal possessions and hazard, we do not need to share in any cost of that insurance because the occupant, it's their furniture. It's not ours. It's their clothing. It's their. So we're not obligated to share in those in the insurance premiums on those. The hazard is if somebody doesn't shovel. You're in Chicago. If you don't shovel your driveway and the mailman slips and falls, that's on your shoulders.
Right.
So we don't participate in that either. But the actual asset, the brick and mortar. So we intend to share a portion of that cost, but of the insurance. But the problem is if a consumer of ours goes to their insurance company and says, "Hey, can you break these out so that I can share with my co-owner, my co-partner, the part about the brick and mortar coverage," the insurance company will jack up the price because now it's unbundled. And that's actually not very favorable for the consumer. But if they choose to want to do that, we will go that route. We will, and rarely do our customers choose that route. But essentially, if they choose not to, then they just get the traditional insurance and we price accordingly. So our set price is adjusted and it's an adjusted price. So we've created those two options for consumers so that they know they have that option. But when it comes to two other things, this is a great question that you asked. Maintenance of the property and taxes on the property, that's solely the consumers because the consumer does benefit long-term from those things. The appreciating value in the property all goes back to the customer. We don't take any profits from the value of the property appreciating. And typically, we know that properties appreciate over time. So taxes, they go to what? Public services that are provided for the occupant living there. And they actually help maintain the price. Because if the public services are working, right? The schools, the law enforcement, fire department, the paving of the road, the shoveling of the snow, the values of those properties do tend to increase. And so that all benefits the occupant. And so we don't share in maintenance and taxes.
So what is the process? So I'm going in, working with a traditional lender. We need to have check stubs that cover 30 days, 2 months of tax returns, verification of rents, verification of employment. And it was one other VO that we got to get. What does the agreement process, what paperwork do I need up front to be eligible to enter into an agreement with Guidance Residential LLC?
Yeah, that's a great question. So to seek out a pre-approval, we issue pre-approvals on a daily basis, right? And these are underwritten pre-approvals, ready to go for real estate agents to take and submit offers on a listing with these pre-approval letters that we generate. The requirements to be pre-approved, to be able to receive a pre-approval, are the things you just mentioned, actually. So we look at credit. We pull credit. We actually look at your debt to income ratio. So we need to look at your pay stubs. We need to look at your tax returns. All of the same criteria that a traditional financier requires to assess the risk involved. And for us, we really harp on these things because our risk is higher. So we are sticklers on looking at these documents very, very closely and making sure that the person is not being, is not going in over their head. Let's just say that financially. So we do our due diligence. We have an army of underwriters, processors, closers, and of course, over 60 licensed account executives. And the term account executives for us in the conventional world would be loan officers. We just don't use loan officers because we're not issuing.
Not loaning. Because you're not loaning money, right?
Correct.
And let me say this. So my entrance into real estate was that as a loan originator. I was a non-licensed loan originator here in the state of Illinois from 1999 until 2004, when then the state of Illinois started to mandate their provisional licensing. And we used to have the account executive would come to our office as mortgage brokers, and they would review these deals. And then some of the deals, they'd make a photocopy of the packet and they would take it with them, right?
Yes.
So kind of understanding that. Now, two things that stood out to me. The first one is the consistent use of the word fairness. And so I'm making the assumption that fairness is a big thing with the American Muslim, because you want it to be fair for all people, which is not something traditionally we're hearing in the world of lending, but based on their beliefs, I'm hearing this word fairness. And I'm like, oh, that's like polite, sounds like the right thing to do. You know what I'm saying?
Yeah.
But you mentioned Fannie Mae and Freddie Mac. So come back to that part, because I was a little bit shocked when you said it.
Well, when we began researching this entire industry in great depth, we looked at the GSEs, because it's an ingenious idea that Congress chartered, back in the 60s and 70s, creating liquidity, right, for the housing industry. And the housing industry is a major component of our economy. So to actually allow Americans to buy homes is crucial to the economy, and so we knew we couldn't do it without them, and so we needed that liquidity, someone to come in and allow us to take our $90,000, let's say in that example, right, where we establish an LLC on this house, and it represents 90% of the original value when the purchase occurred, so it's $90,000. We needed to liquidate that somehow so we can go help more and more and more of these consumers. So when we engaged with Freddie Mac and Fannie Mae, at first it was a scary thought. Wait a minute, you're co-owning with everybody? There's a lot of risk involved in that. But through numerous discussions, at-length discussions with their legal counsels and the folks over there, I think they have a genuine interest. It's in their charter to assist the underserved and ensure that there are segments amongst the entire American fabric that are provided the same opportunities to homeownership as others. So it was after about 2 years or so, the entire R&D project lasted for 3 years. Freddie Mac agreed; they were first to jump on board, and then Fannie Mae. And so they're essentially looking at our contracts as revenue generating instruments, right? So they securitize these. And so what they do is that they essentially lay out for us their conditions, their requirements. We meet them. Then they bring in essentially their financial wherewithal and commit to, let's say, this one co-ownership commitment agreement packet, and it has its revenue that's being generated. And so they take it, they securitize it like they normally do with other mortgages, and then they sell it on the secondary market. Someone out in China or whoever's buying our mortgage-backed securities is receiving the returns on these mortgage-backed securities. And in some of these, there are essentially utilization fees, not interest on money loaned. So they're revenue generating just like any other instrument there, but it's structured completely differently.
So unlike me going to buy a piece of property where I'm coming in and I'm signing a note, and I'm also going to sign that note, but I'm going to go to a title company. Where do people close on the agreement at? What does that process look like?
Great question. So we have relationships with title companies around the 34 states where we operate in. And so in our first 5-6 years, we had to do a lot of education with a lot of title companies. They even would receive our documents and they'd hit the brakes. They'd say, "What is this? Where's the note? Where's the lender agreement? I don't see a lender agreement in here. What is this co-ownership commitment agreement? Oh my gosh, I've never seen anything like this." Stop. So we've done our part in educating. We used to have our closing department on the phone constantly. If you can imagine, our headquarters is in Northern Virginia. We'd have closings in California and on the West Coast late at night at 8 p.m. on the East Coast. They're on the phone with settlement agents and telling them, it's fine. Trust us. This has been vetted. We have legal opinions. Freddie Mac and Fannie Mae are our investor partners. This is what this represents. This is what this document represents. And so we've gone through a lot, and now it's become second nature in the states we operate in for the title companies that work with us to understand our documentation. We still come across some who ask questions. Some builders, for example, because you have builders coming in as well, who stop for a second and ask a question or two and get more feedback from us and then proceed. But one of the interesting things I want to add to this, and I think this will probably hit home, you mentioned fairness. And I had talked about that at the beginning. I'll give you one example of this. Late fees. So in the conventional mortgage world, when you're late making a payment, across the board, they charge you 5%. That's your penalty for being late. Doesn't matter why. They don't ask why you're late. It doesn't matter. You were late making your mortgage payment. It's 5%. So on a $3,500 a month mortgage payment, that's $175 that you're going to pay. And if you don't pay it, and if you go 2 months and 3 months, it compounds. So it's your $3,500 plus the $175 combined times 5%. So it compounds. Well, when we were developing this program, the scholars that were overseeing this project said to us, where does that money go? What's this late payment? We need to break it down. We need you guidance to go out and conduct research on what it costs you as an institution when someone doesn't make their payment on time. What does it actually cost you? We were talking about administrative costs. And so what we had to do is hire a firm that went through the process, because we weren't in the mortgage business at that time. This was 2000, and we weren't yet open for business. We didn't know what it would cost. So they ran through all the costs from the stamp on the late payment notice, right? Because we'd have to send a late notice. We'd have to pick up the phone and call the customer by law. We'd have to do all of these things now. And so it came out to $50. That's what they estimated it to be back in 2000. $50 of administrative cost to remind a customer that their due date has come and gone, and now they need to pay in case they forgot. So we were mandated at that time to only charge up to $50 on every late payment, no matter what the mortgage contract said, no matter what the amount was. So then it begs a question, when you get slapped with $175 on a late fee, where does the $125 go? It's profit. So the banks and others make a profit when you trip up, when you hit some hardship, when you experience some hardship. They see that as an opportunity to make money. We are prohibited from making money during those opportunities. We actually look at them as just an opportunity to remind you, help you make sure you make your payment, stay on top of your obligation. And so we don't make a penny, and we haven't increased it since 2000. It's probably higher than $50 now. But that's one major aspect of this structure, that it tells you the level of detail that we went into to ensure that we're doing things correctly.
That's why I was fascinated, because I'm like, okay, how do you do this? What does this process look like? The fact that you've grown from 3 states to 34 states, you brought in scholars, when your Fannie and Freddie Mac back. I mean, like, it's so fascinating. So it really is, even though you've been in existence now, for 20 plus years, it is still innovative because so many people don't know it exists, and it goes against traditional beliefs.
Yeah, it really does. It's we've heard from so many in the industry that this is just something completely unique, something different, something innovative, something to be looked at. I mean, you had the President of the United States a year ago in the State of the Union address talk about cracking down on late fees associated with credit cards, if you recall.
Yes.
We've been doing that. I mean, we've never gouged. I just finished explaining how we administer our late fees and how they're capped. It is great that we're kind of introducing this out there for anyone, but we really started to try to help a certain segment of the market achieve the dream of homeownership without compromising on their beliefs, without compromising on their faith. Riba, R-I-B-A, riba, which is usury in Islam. It's the Arabic word for usury. It's not a minor prohibition. It's a major prohibition. Major. We've had people come to us and say, I need to refinance my conventional mortgage with you ASAP because I'm going in for surgery, and it is critical surgery. It's a very complex surgery, and I do not want to die in this world having riba associated with my name. And it's incredible. I mean, we've had some incredible stories over these last 22 years of people wanting to ensure they remove that stain from their lives before potentially meeting, their creator. And so it is a major prohibition. And so we're just happy that we're able to provide that option that gives peace of mind to those seeking homeownership, gives them the confidence that it's a consumer-friendly structure on top of that, and facilitates one of the biggest transactions that is so consequential to their next generation, right? It creates generational wealth. We all know the power of homeownership, and just it's a blessing to be kind of in that position.
Well, yes, because we want our souls to be saved. Like, I can't even imagine the mental burden that comes from that. You know what I'm saying? And if I heard you correctly, you do not have to be an American Muslim in order to utilize this as a way to acquire real estate.
Absolutely not. Absolutely not. Of course not. And we've had a number of different cases. We don't ask what someone's faith is when they apply with us. We've never asked. We never will. But we've had people volunteer that information to us. I'm not a Muslim, but you know what? I'm a Christian. I'm of the Jewish faith. I believe in what you guys are doing. I know it was originally in our scriptures. And so can we get qualified? And of course, we've helped finance homes for those who are not Muslim since our beginning.
You know what? I'm elated that I met you. And actually, I met someone with you before I met you, I believe, at the NAR-Next conference, right?
Right.
To have this opportunity, one, to learn more, to be a solution for buyers in the marketplace, regardless to their faith or not. This is innovative. It is cutting edge. And I want to thank you. If people are looking to explore what you offer at Guidance Residential, where do they come to find more information?
Wonderful. They can visit our website, guidanceresidential.com. There's a slew of information on there. We've tried to take this complex subject matter and, offer as much or as little as people can absorb. So we have a white paper. You can read all the details that I've just spoken about. We have all the way down to shorts, videos that help explain our structure and how to then proceed. There's a apply now button. There are many apply now buttons on our website. There's pre-qualify now. There's all kinds of things to engage with. You can even reach out to a local representative. And for the realtor community or the real estate agent community out there who's maybe listening, we've worked very closely with the real estate community. In fact, we have a sister company called Guidance Home Services. And Guidance Home Services has a network of about 1,700 real estate agents that have been pre-screened by our sister company because we want them to understand our market. We want them to understand our program, not to be shocked by it. And once they understand it, they're essentially in this referral program. that's offered by Guidance Home Services. So you can actually become a resource for us in our community if they do not have a real estate agent. We would essentially pre-approve them, hand them off to our sister company. They would find you. They have an app. They'll send you a referring alert on your phone, and then you'll have a customer as well. You can even refer customers through that channel and earn brownie points as they score all of those members in terms of kind of the affinity of the relationship. But I encourage all of our real estate agent professionals out there to learn more and have this tool in their toolbox, because when you come across someone who happens to be Muslim or may care more about these faith-based type structures, it's a benefit to you to have that knowledge and to pass on.
Well, Hussam, I want to thank you for taking time out of your schedule to be here today to educate my fellow licensed real estate professionals on yet another tool to have in order to help not only just buyers, but those clients who are also looking to refinance their homes. Thank you.
Marky, thank you so much for having me. It's such an honor to be on your show, and it's a blessing to have met you.
Thank you.